Tyler, new worries today about the health of the iPhone franchise. Key Apple supplier Lumentum slashing its Q2 forecast, saying that a large customer cut orders. Now, Lumentum didn't name that customer specifically, but the laser maker's technology does enable the iPhone's Face ID feature. Tim Cook in the past, remember, has emphasized that his supply chain is so big, so complex. His point being it's hard to extrapolate trends from just a handful of data points. Other smaller laser suppliers to Apple include companies like Finisar and 26. Loop Ventures estimates those two companies, which recently announced a merger, account for about 50% of this critical laser technology. Still, the bears are out in force today. New Street's Pierre Fargo says this news just reinforces his view that iPhone shipments are on a declining trend. And separately, JP Morgan, which rates Apple overweight, trimmed its earnings estimates, saying they now forecast modest year-over-year declines in iPhone shipments. An influential Apple analyst, Ming-Chi Kuo, cut his iPhone XR shipments by about 30 million units. On the other hand, I did catch up with Citi's Jim Suva. He says Lumentum knows here is a concern, but he was never counting on a jump in iPhone units anyway. He's bulled up because he says he sees a jump in iPhone revenue, services growth, and capital return. Becky, back to you.
All right, Josh, thank you very much. Apple shares now down just about 12% over the last month. So just how worried should investors be? Joining us right now on the Newsline is Aaron Rakers. He's an analyst with Wells Fargo. We should note that Aaron has a market perform rating with a $210 price target on Apple. Aaron, what do you think? Is this warranted or not, this sell-off that we're seeing today?
Yeah, I think given the extent of the cut and also noting that Lumentum just provided guidance just a couple weeks ago, I think definitely calls out some worry on some of the iPhone units and the mix shift. I think a lot of people, as previously mentioned, have more of a flattish unit growth expectation going forward, but that blended average selling price moving upward was kind of an offset to that. So I think definitely if they're having some challenges with the premium products, I think that's going to continue to weigh on shares, and we think today's move is warranted. And again, we do have a market perform rating on shares of Apple.
What if you're wrong? What if Lumentum's warning is coming from something else?
Yeah, I think then we're wrong. I think then, we think about the mix shift within the portfolio and how the ASP or average selling price would play out. And then, I think we go back to our numbers where we're more or less low single digit unit growth on the iPhones, and then it becomes a bit more of an ASP and then also services growth expectation. I think, as we sit here right now, given some of the macro concerns, I think there's clearly going to continue to be a drumbeat of soft expectations going into Apple's next earnings.
I'd love you to tease out the point that you keep coming back to, and that is the relative importance of unit sales, a number that I think Apple is going to cease providing on iPhones, versus the average selling price, which is going up. Unit sales going up, average selling price goes up. And really what you care about, isn't it, is total revenue and profitability. Tease out the conundrum here for us.
Yeah, I think the conundrum is just that product cycle dynamic. If you look back over the past couple of years, Apple on average has had about 70% of their latest generation iPhones kind of as a contribution to the December quarter. So that kind of filters back to the ASP expectation. So, if we're actually seeing a bit of a mix away from some of the more premium products, the XR and the XS, towards the iPhone 8 or even the iPhone 7, we're talking about some concerns around that pushing the $800 plus price point on the Apple. And I think that's where investors could take a little bit of concern of, Apple's maybe just pushed a little bit too far on the higher end price points of these products.
Aaron, it's Dom here. One of the things we know about Apple going forward is we are not going to get unit sales volumes of any of these products. Is that important for you as an analyst when you look at this kind of overall scheme of whether there is transparency into Apple's growth plan in light of what's happening with these possible headwinds from suppliers?
Yeah, I think there's a double-edged sword here. I think that, we clearly appreciate what Apple's trying to communicate with regard to the importance of the services growth, and then that coupled with the installed base. But, on the sell side, I think investors, including us, have really modeled this company on the unit growth expectations going forward, or lack thereof. So to the extent that transparency starts to subside, I think it's going to be much more difficult for us to understand, how exactly that 60+% revenue contribution kind of falls out as we look at our model expectations going forward.
Hey, Aaron, just very quickly, your price target again is $210. With the sell-off today, you're talking about the stock down almost $15 below that. No, you're not incredibly fond of the stock. Are you going to bring your price target down just based on the news we've heard today?
Yeah, so we reiterated the price target today. I mean, we really look at, 20% upside to kind of justify a buy rating on the shares. I would point out that, Apple is still trading at roughly the median multiple around 13, 14 times. It's traded in a range of roughly 10 to 17 times over the past 5 years. So we're not at that low-end band of the valuation at this point, and I think clearly, given today's news and some of the news over the last week or so, there's more downward rather than upward pressure on expectations in terms of estimates here at this point.